Stop using strategies that simply do not work. I'm going to show you how you can make, just say if you have a goal of making $500 per day, yes, that's about $2,500 a week. Something that works day in and day out if you put the time in. Simply scalping, doesn't matter, whatever your future market or contract you like to trade. The NASDAQ futures, which could be the E-mini or the micro version. But I'm not going to sit here and say you're going to make $500 a day trading the micros, guys. You have to be, more realistic unless you're trading multiple contracts. All right. Now, if you're someone that jumps into a trade just because the market is pushing hard to the upside or downside, you are chasing the market. All right. A lot of people out there that like to trade what's called break and retest, where the market breaks above, say a swing high or swing low. That means it's breaking structure. And you're looking to take a trade back at the neckline of that swing break. Okay. That's called a break and retest. I'm going to show you what that is. I honestly feel that's not the best area to look for an opportunity to trade. Why? Because the move's already started. In most instances, it could be tucked back at the back end of that swing to where the market maybe pull, where we should be waiting for the market to pull back to at the lower extremity of a swing or leg, and then look to move in the direction with the overall higher base charts, whether you're trading time or range, tick volume, whatever it is you trade. Like simply right here, I'll show you for an example. All right. You see this move to the upside right here? That's aggressive buying. And we have where the market broke above this area structure. This is on my 120 range. Higher range chart. Okay. Now, if I simply wait for the market to come back to the origination point where the momentum started to the upside, doesn't that just make more sense than trading like right here, a push up, pull back, the moment market break structure here, and then come back to the neckline right here, looking for an opportunity to go long? Does it happen when you can trade, break, and retest? Yes. But what makes more sense is get in where the banks and institutions have geared up, started filling orders or placing positions within the market and looking to ride with them. Most times this is more than, if you look at it right here, it pushes up. Once it breaks that area there, you got all the way back down here where they may want to come back and test, and then you can take that beautiful ride back to the upside. Now, we don't know really unless we have like imbalances or gaps to the left hand side. Like if you take a break and retest right here back to this neckline of this high, yes, it did break this structure right here. It came back, it tested the neckline there, which is the break and retest, and it pushed higher. But you have to think more logical. If there's nothing really here to feel, or where the market may be trying to aim to push up to maybe test an area of supply resting up in here, or imbalances, and it pulls back right here, we have no gauge to know how far they're going to go to the upside there. It makes more sense to wait for the pullback all the way to where, again, the origination of the actual movement within that momentum bullish ride to the upside took place at. So we wait for the pullback. We can see all this bearish activity comes to the downside. The market taps to what? The higher range zone, demand zone, and this is my first approach or attempt to where I'll mark up my zones at. Then what I'll do is I'll move down to my lower range chart, my 24 range chart, and I'll either look for a high probability demand zone within this higher range zone here off the higher range chart, or I'll look for where the market starts to make a bullish move, breaking structure to the upside, and a pull back to a key area of newly formed demand to go back to the upside with this bullish run. Okay, so this is the bullish run. Pulls back, look for an opportunity to go long with structure breaks, to go long, to take out and aim these imbalances first to be filled, and then aim to take out that high right there. That's what actually makes sense. I mean, and you can see it when the market made a high here, came back, broke higher, came back down here. This is a high probability zone. It did react off of here and push back to the upside, but you have to be, mindful of what you have right here, or structural break to the downside. So if I'm going to enter off this trade, I got to be mindful that there is, basically a tested area of supply or mitigated area of supply where the market can still hold up. And it's a structural break right here. So I'd get out at the trade right here, not looking to fill or for the market to take out this high right here, but to take it right back up to this swing high right here. Okay. The market comes down. As you can see, it's swinging lower. Now look what happens. As we start to push to the upside here, we tap into this area of supply right here. Okay. This is supply. It's not a neckline area. We got to push down, pull back, the market breaking structure lower. Okay. Makes another structure break here, comes back up, test that supply area. I'll be looking to go short off that area there. Just like right here, I'm going to show you another example. The market made a high, higher low, broke structure above this high here, pull back, broke more structure. This would be the neckline of that swing right there, that swing high right there. But look what happens. It comes back to it, Okay, I'm not interested in trading right here. I want to trade down here where the origination of the movement started to the upside with that bullish run there. Okay, if I take my trade here, I'm gambling at 50% of not knowing if it's going to continue pushing higher or if it's going to continue pushing lower. I'd rather increase my chances of taking a better setup back at the back end where the move started from. This is where the aggressive buying took place to the upside. This is the high probability demand zone where there's an imbalance resting back at the zone. Wait for the market to come back to it. Look for the rejection. Go long, okay? And then break structure right here. See where it comes back right here? Yeah, it did tap off the break line. Off the break and retest of this area right here and push to the upside. But we don't always know that it's going to do that. And not all times will it come back down here and test this high probability demand zone. But your chances will increase for a better setup to where it will move in your direction, because this, think about it, in all sense of the matter and all its logic, this is where the origination of this move started to push to the upside with aggressive force that broke this area. Not right here. The move was right here. Yeah, this may have been where it broke above structure, but this is not what the move started at right there. Here's another good example right here. The 22nd moving into the 23rd. The market, as you can see, it makes this high here. It retraces back. It breaks structure, as you can see, above these highs right here. I'm not interested in taking a trade when it comes back right here. You see when it came back right here, kind of like at the neckline, and then you get this bullish candle. Look, and then what happened? It came back and tested this area. This is where the aggressive buying that took place, that took this area of structure out here, aggressive buying to the upside. So look for the market to pull back to a key area of supply. A demand in this case here, because that's the aggressive buying. It's a high probability zone where there's an imbalance resting back at the actual zone itself. This is where I will take my trade, not right up in this area here. You get faked out and the market comes back down. I truly believe that a lot of break and retest type setups, you're going to get faked out more so on than taking a trade at a supply or demand zone. The risk decreases at a area of demand or supply because this is where it started at, not right here. You're trading more than at the ending point where the move ended at their broke structure here. Then you're trying to take a trade coming back to take a ride to the upside. The only time I start really seeing breaks and retests is really working out is when the market breaks through an area of structure and it just wants to be bullish for a period of time. And we don't know, when that's going to happen or how long it's going to happen. So that's why I don't trade break and retest. I prefer to trade the actual areas where the market pulls back to and scalp them on the way going back to the upside. Once it breaks structure, look for that pull back to that area of supply or demand and take it up if we're coming back to the demand zone, and then take it to the downside if we tap into a high probability supply zone. Okay. All right. So that makes sense right there. Let's take a look at maybe some other ones. Okay. So we talked about that one. This one here was a low probability setup, but there was a structural break to the upside right here. It took out these highs right here. It came back. It tested this low probability demand zone right here, and it pushed to the upside. I'm not interested in trading right here. I want to come down to where the movement started back to the upside, where the demand setup unfolded or took place at. Let's take a look here and see what else we have. Another one right here. Push up, pull back, break structure, comes back. I'm not interested in the neckline. Where did the demand what does it lie at? Where does it, where is it at on the chart? Right here, okay? This is where the aggressive buying took place. Take the trade coming back and then move in the direction with this bullish movement to the upside here, okay? So that's what actually works. Now, this is how I go about making, at a minimum $500 a day, depending on how the market is actually moving. There are plenty of opportunities, especially trading on the micro or the micro E-mini NASDAQ, or you can trade the ES futures, but trying to make $500 a day, trade the micro is going to be a little bit tough unless you're trading multiple contracts. Now, can you do that trading the full-on E-minis? Yeah, with simply just like one, maybe two contracts, one trade a day, you can make a minimum of $500. And how I basically went about teaching myself how to do this was just simply identify on my higher base chart first, whether it's my 120 or maybe even a higher chart than that, maybe 240. Mark up your high probability demand zones first. Okay, off your higher base charts. Doesn't matter what charts you use, whether you're using time charts, that's fine just as well. If you're using maybe a 60-minute chart or a 4-hour chart, whatever it may be, mark up your higher charts first. For me, I'm using my higher range NASDAQ chart here on the 120. I'll mark up that first zone first from the higher range chart. Then I'll move down to my entry chart. So whatever your entry chart is, once you have your higher chart marked up, then scale down to that lower chart and look for a setup moving in the same direction as what you just marked off on your higher chart. If that makes sense. Okay, so I'm gonna show you, just like from Friday's trading session, 2 back-to-back demand setups that you could have taken. That would have gave you, trading the E-mini futures, even on 1-2 contracts, or trading both of these setups. You could have made $500 very easy by doing so. On the higher range chart, you can see that we're bullish to the upside here on the 120. We got a pullback. It comes down and makes a low, lower high, and lower low here, right? But we're still bullish because we haven't taken out any significant area of structure below to the left-hand side of the chart, meaning where we want to see kind of like a setup that looks like, I'm going to show you right quick. If we're bullish to the upside, bullish momentum to the upside, making higher highs and higher lows. This is unless we have a swing down, and this is our last run to the upside, like right here, okay? And then we come down, make our first low, okay, or make a swing low, or I should say the first run to the downside, and then it makes a lower high. And then we got where it's made a lower high, not taking out this high here, and then comes down and breaks below this area right here, making a new low and taking out structure here. If it took out right here, then that would be a reversal if it took out looking like this. But what it did was come down, makes a low, lower high, come down, take out this little low here, but not taking out this low, and then we run back to the upside, right? So we're still bullish overall in my eyes on the higher range chart, or overall in the NASDAQ futures. So then we make a push up, which is a small, high here, pull back, and we create a demand zone right here. So if we're still bullish and we got a demand set up going to the upside, right, I'm going to be looking for a pullback on my lower range chart, which I'm going to go down now and take a look at and show you, for opportunities to continue moving with the flow of the market to the upside. Let's take a look at it. So I'll move down to my lower range, my 24 range chart. So maybe you're using, time-based, maybe you're using like a 5-minute chart, or if you're trading ticker volume, whatever it may be that you're using to get into your trades with. Scale down, but first mark your higher chart, like right here. Okay, I marked up this zone here. This was a valid demand zone. We're bullish to the upside on the 120. Move down, and we can see that blue box. That's that 120 zone. The market's breaking structure to the upside, and that's what I'm looking for. So what it did here, I'm going to show you. When it created this demand zone to the upside, you can see the aggressive buying. Look, it comes right back to it. Right here, comes back to it, taps the demand zone there. So I'm looking for either a demand zone within the higher 120 range demand zone area, or look for a newly created zone when the market starts breaking to the upside and moving with the higher range chart. So push up, it takes out structure right here on the 24, pull back, valid area demand, go long from there. Okay, now you can get to the trade, say right here at 388. You can aim for this high to be taken out, and then continue moving to the upside. If you look to the left hand, let's see what we have here. So we get the push up here, market comes back, and look for these. If you look to your left, you can see where there are imbalances back up to the supply area where the market broke structure coming to the downside. Aim for those areas to be filled. So if we got into the trade here at 380, what did I say? I'm sorry. Pull back here at 388, then you can look for the market to continue pushing to the upside till it taps into that supply zone there at 23,404. That's a nice pickup there. That's about, I think about 16 points right there to the upside. All right. So then we get another structure break to the upside. The market comes back, taps this demand zone right here. Aggressive buying, break a structure, pulls back, taps the area of demand right here. Okay. And when it does so, we can go long, aiming for imbalances to be filled, and the high to be ran. So in this case here, this was one setup, 16 points. Break a structure above here, pull back. On the lower time frame again, we're still moving in the overall direction of the higher base charts. Demand zone, imbalance resting back at the actual zone. I would get into the trade here at 388. Basically, let me see if this is right. Yeah, 388 again, because we came back and tested this demand zone here. And we got this candle here, that the first candle break to the upside, or you can wait for another bullish candle to close. Maybe you can get in here at 393. I would get in here again at 388 and aim to take it back up to this area here at 408, and that's 20 points. Is that right? Yeah, 20 points to the upside right there. So that's a total of 36 points that you can make on a day. Just pick it up. I'm going to show you using the calculator right quick. If you were to use, one contract, and one contract is 4 ticks in every point on the NASDAQ, and every tick is worth $5, so every point is $20. So let's take a look. If we were to pick up 20 points, right? Trading this one contract and 40 ticks, 4 ticks in every point, that's 80 ticks right there, times $5, per point. That's $400 trading one contract. If you're trading two contracts, that'd be $800. So within this area of these back-to-back setups right here, that was 36 points. So just imagine being able to capture or get into a trade using one contract and picking up those 36 points, right? So let's take a look. 36 times 4. Okay, that's 144 ticks times 5. And that's what you would make on those two small trades right there, back-to-back trading and aiming for, again, in this case here, pull back right here, the high to be taken out and run up to fill these imbalances to the back to the upside here. Okay, and you had a break of structure here to the upside. I broke this here, come back another demand zone, run it, take out the high right there again. And you got to be mindful once it gets up into this area that it may kind of stall out because you have, this is a supply area right here, and it's a little bit, that's basically an area of resistance right there. But again, this is how you can do it to, and how I did it to teach myself how to scalp using this simple strategy to be able to make like $500 a day, or you can make whatever your goal is. All right. I'm not tied to the money portion of it. I'm tied to the actual trades and looking for these great setups that unfold on the charts. At the end of the day, you go back and look at your P&L, right? So that's going to be gross minus whatever, small commissions you may have. But still, that's a wonderful day of trading, something that you could teach yourself. And that's basically what I've been sharing here on the platform for many, many months here. So, trade strategies that actually work. Don't trade ones that don't make any sense, that or going to give you maybe a low win rate, break and retest. It's kind of sketchy there because you don't know if that's going to be the bottom out or the area, the finale area, or the area where the market's really going to kind of tap into and make a decision. To me, that's kind of the 50-50 gray area there. You're kind of chasing the markets at that point there. I would wait for it to pull back and get into that trade where it started at. Okay. Now, anyone that wants to know more about the strategy and dig deeper into my trade setups that I talk about so much on the video, on the channel here, for one, what I do is I break down my trades. Now there's a private community to where I really go into great depth and detail about the strategy, and you can either become an elite or an ultra elite, supporter or member here on the channel. So what you receive if you become an elite member are the trade breakdowns, which are tons of video content there, where I'll walk you through setup after setup after setup, talking to you just like as if you're sitting right next to me, explaining the strategy to you, explaining my mindset on these trades, explaining where to place your stop loss, where to place your profit target, and talking about structure as well. Because the number one thing you really need to master and understand is structure, both structure and price action. Okay, so that's why I walk you through when we talk about these setups, so that you can understand why I took the trade, but also be able to go back and back test and forward test, things on your own. But you also receive the video playlist, which is a list of series by series or links by links of video content that will aid you in your own personal trading if you take the time. So take pen and pad, take good notes, but you also receive a great video surrounding the market structure for anyone that's struggling with that. That's what you get for becoming an elite supporter or member here on the channel. I'm going to tell you how to become one here in a moment. But if you really want to, go a step above and receive everything that I just mentioned, plus receive like not my trade breakdown. I'm sorry guys, the live recorded trade sessions and the market recap videos. So you receive the trade breakdown videos, tons of them, video playlists, the market structure video, the live recorded trading sessions, which have helped so many people out because I'm actually recording my sessions full on, and you can see the trades I take, and I'm basically walking you through the market and talking to you, so you can, when you look at the charts, you know what you're looking for, or it should help you out. Now, I can't guarantee anything to anyone out there. You're going to have to really put the time in to study the charts and to understand things from a aspect or perspective of understanding structure, because that's the most important thing. Okay, some of you come over with bad habits, some of you are still working on yourselves when it comes to psychology, so that part there, you're going to have to improve yourself on if you're struggling with anything. That's why I can't guarantee anything, because, my style of trading may not, work for the next trader, because they may be stuck and used to something else that maybe they're okay with a 60% win rate. All right. But I don't talk about win rates too much, because the fact is the matter, some strategies you can use and they work very well, even though they may have a low win rate, and they allow you to still become profitable consistently. I'm a scalper, so I'm looking for short movements within the market to get in and get out. So my win rate is going to be, of course, going to be higher. But Not going to talk about that because that's not what I focus on overall. What I focus on is taking quality setups within the markets surrounding supply and demand. So that if you want to become an ultra elite member, listen, the link is down in the description portion of the video. Again, I just talked about the perks and rewards for each tier. If you go down in the description portion of the video, you'll see the first link is the Discord. That's free to join, so come over and join us. The second link is going to be the it's going to be titled Ultra Elite Supporter. If you click on that, wait a couple seconds, you'll see a couple tiers pop up from YouTube to where you can actually join either the elite or the ultra elite tier to become a member or supporter. Very inexpensive. I'm talking about very inexpensive for anyone that wants to join, and you receive so much valuable content within becoming a member there. So that's all I have, guys. If you have not taken the time to go ahead and subscribe to the channel, please do so right now by clicking that sub button. Make sure to turn your post notifications on if you haven't done so. And last but not least, please drop me a like on the video if you found content in today's video. Appreciate it. See everyone this week. Tomorrow is actually Monday, so please enjoy the rest of your weekend.